problem with most people is they're stuck in microeconomy. You know, they don't see the big picture. 90% of Americans just believe that don't worry, America will bounce back. Everything will be happy days are here again. And as a U.S. Marine, you know, we call the people who are stuck in the microeconomy, they got their heads up their asses. They can't even see what's happening in the real world. And the question is, are you prepared for it? And another better question is, how do you prepare for it, and how do we get through? How do you get through what's about to happen? Because it's one thing to crash, but can you survive it? Everything is changing so rapidly that I might be saying something today completely erroneous in 6 months here. And the reason it's important is because back in 2008, I think, let's say, there was Hurricane Ike. And right after that, Lehman Brothers collapsed. A lot of the bad news going on, but it's especially bad news for those who drank the Kool-Aid of go to school, get a job, work hard, save money, and invest in a 401k or get a job with a pension. And the reason, you know, the Queen, Prime Minister trusts a woman, kisses the Queen dies, and also Hurricane Ike hits, and the British pound collapses, is because the real big consequence of all this is that pensions almost died in England. So all the guys who drank the Kool-Aid, all you did was have a safe, secure job, and the government pension would save you, or you were a firefighter or a police officer or a teacher, your pensions would save you.
Dow lost nearly all of a 400-plus point gain to end basically flat. The move comes after Governor Andrew Bailey urged pension funds to rebalance quickly, saying, quote, "My message is you've got 3 days left now. You've got to get this done." He added, quote, "The essence of financial stability is that intervention is temporary. It's not prolonged."
My message to the funds involved and all the firms involved in managing those funds, you've got 3 days left now. You've got to get this done. Because again, part of the essence, I think, of a financial stability intervention is that it is clearly temporary.
The program was announced in late September amid widespread liquidity problems in UK pension funds. That was brought on by a surge in yields in UK gilts after the new UK government announced plans to cut taxes and boost government deficits.
It can't get more interesting than this right now. I mean, I've never seen it so screwed up. 25 years ago, when Kim and I published Rich Dad, Poor Dad, we knew it was going to get bad, but I didn't think it was going to get this bad. My concern as an old guy is that my generation, a baby boom generation, the first generation with a defined contribution pension plan versus a defined benefit pension plan. But what happened was, in my father's generation, they had a pension for life. So if let's say they worked for Ford Motor Company, they got a pension for life. But when the baby boomers came along, they said it was too expensive and we couldn't compete with China and Japan and Europe. So they took away the defined benefit pension plan, which is what our World War II generation had. And in 1974, they shifted it to the defined contribution. So suddenly, most baby boomers have defined contribution, a 401k, IRAs, and things like this. My concern is, the reason I say it's interesting times, we're in a massive, 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 massive stock market bubble, real estate bubble, bond market bubble. Everything is in a bubble, and the average baby boomer, my generation, has not an effing clue what that means. Many of the people who think they're safe, like the airline pilots and UPS drivers and all these guys, well, Wall Street's been stealing their pensions. And so that's why Kim and I do not have a pension. We just don't want one. And we don't need one. But you need to know about them, especially being in interesting times. I just want to say this to all millennials. People complain about you guys, especially the older generation, the boomers. I'm a boomer. But the fact is that when I started looking into what's going on with the boomers, I have this to say to all of you, which is from my point of view as a boomer, as you guys are. So when I looked into what your situation is, we had a thing called Social Security. So they put nothing into Social Security because it came out, I think, 1933 or 36, whenever it came out. Social Security is now bankrupt. Look at this chart over here. This is Social Security. So the boomers now are facing a world without Social Security because Social Security is broke. And the more I looked into, boomers and millennials, this is another thing that you guys face, is that expenses are going up of America. But what's happening is income is coming down. So you guys are in very serious trouble. That's like a family where they keep spending more money, but the father or mother are not bringing money in. So what we're passing on to you guys, World War II and the boomer generation, is an estimated $180 trillion deficit to as high as $225 trillion when you count Social Security and Medicare.
Most people sadly have a buy and hope strategy. They buy their investments, their mutual funds, and their 401k, and they just hope everything's going to work out. As I've said before in the show, hope is not a retirement strategy. And that's what most people do. They have their head in the sand, and so far they've woken up today and they've seen their 401k down by 20, 30, 25, 30%, wondering what happened. And this is not over. And if people think that that's going to get better, it's not. Things are going to get a lot worse. The average 401k is $70,000. I mean, and that's what people are expecting to retire on at age 65. I mean, it's absolutely scary. How long will $70,000 last? So I'm a paper guy, but I firmly believe in oil and gas, other commodities like gold and silver. I think everyone should have a mixture of everything.
My poor dad, my PhD father, he always said to me, he says, I'd be a rich man if I didn't have you kids. And I said, well, Dad, not my fault you had kids. I just can't afford it because I have kids. And the more he said that, the angrier I got. So when I met my rich dad at age 9, he says, well, that's why your old man's poor, because he's lazy. He thinks his PhD is going to carry him. He says, everybody can say, I don't have money, I can't afford it. He says, that's why he's poor. He's lazy. But my father kept going back to school, Stanford, University of Chicago, Northwestern. He never learned any of this stuff. They still don't know it because most teachers want a paycheck, pension, and tenure. They want job security. So the mindset is different. But the reason I had to learn to raise money was because I had no money. And so if you read Rich Dad, Poor Dad, in there, my rich dad always said, never say, I can't afford it. And it was my rich dad and many of my teachers subsequent to that said, lazy people always say, I can't afford it. I don't have the money. That's why they're poor. They have a poor mindset.